Traders, Cousin Vinny coming to you from theclosingprint.com, July the 5th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week. International indices also moved higher with the exception of Nikkei, which moved less than 1% lower. We had all the FANG stocks, all of the big cap tech names that we follow moving higher as well. Bond stock ratio is bullish. Comp is in a range. It's mostly bullish. S&P 1500 is bullish, and the ARC Institutional Index is bullish as well. Most of our indicators and oscillators are bullish with the exception of breadth, which needs to improve. Dollar is in a rising channel. Bonds are still in a range. Over the last 14 weeks, commodities have been moving higher over the last 14 weeks or so, with the exception of gold, which is about to break out. It's at the top of its range. It looks like it's going to follow through this week. So if you're in GLD or gold, make sure you check that out. The heat map is also improving for the S&P 500 spider sectors. Most of those pulled back to the 9 or 21-day or 50-day moving averages and bounced last week. In addition to a very bullish-looking international market, with many of the indices moving higher, notably India, the strongest, along with emerging markets, Europe, and South America. We'll look at some IBD 50 names. There's not a lot this week. We'll also look at some MarketSmith Growth 250 names in white that have been set up this past week going into this week, and stocks that are showing above average volume last week that look bullish in green. The Dow Industrials, we have a few names there as well, with Bukowski showing 3 of 5 of his signals red. His CPI signal is half green since the end of June at 91%. That's bullish, with 5 bearish patterns, 51 bullish patterns, and 232 patterns waiting for breakout. Again, we're in day trade mode, of course, short-term swings. VIX remains the key. If it continues to move lower this week, that would be bullish for the equity market, with combined S&P 500 and Spiders gamma support at 310, 3100, 315, 3150 was too much resistance last week. We did close a little bit lower, but bullish on the week. The Spiders Renko chart, which removes the noise and is only based on price action, where we can see we continue to build white bricks. We did run into resistance at 315. We continue to build higher highs and higher lows, while remaining in this sideways range for the last 3 or 4 weeks, below 315 but above the 50 and 200-day moving averages. RSI is rising and above 50, and MACD is turning, looking like it's going to give us a crossover this week. The sideways range that we remain in continues to build on lower volume, so there's no distribution days. That's bullish. And with price action at the top of the range, there's always the possibility that we could pull back in. So we have to watch very closely on Monday and Tuesday to confirm whether or not institutions want to push price action above 315 into this area over here, where there's less supply or less resistance, as price action conceivably could move higher. Again, there's also the possibility we could stay inside of this range and pull back in on any unforeseen catalyst that we haven't looked at thus far. That said, my focus remains on the NASDAQ 100 and big cap tech names, which we pointed out all moved higher last week, with special emphasis on the FANG stocks. In order for the NASDAQ to roll over or become bearish, we at least need to see Apple, Amazon, Facebook, Google, Netflix, and Nvidia all roll over and move back below their bullish and ascending 21-day and 50-day moving averages. A move below the 9 EMA would be a caution signal, and a move below the 21-day would be a sell signal short term. I don't see that in the cards at this point, except for perhaps Facebook, which is testing the 21-day after a big reversal on Tuesday, Wednesday, and Thursday. Bottom line, for the NASDAQ to fail, we need to see these stocks fail as well. So I'll be focused more on the NASDAQ stocks and growth in general this week, confirmed by what we see with the growth versus value ratio. Growth is clearly outperforming as this line rises. You can see the charts with the growth index in the upper panel and value in the lower panel. Value is below the 21-day. 21-day is rolling over. Growth stocks ascending, bullish 21-day with price above. That said, the S&P Equal Weight Index does say that we could see more follow-through to the upside. CCI signal has given us a trigger. Each time we've noted periods where we had a signal where CCI moved from oversold and started trending higher. Each vertical line giving us an opportunity, 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 opportunity. Again, we're looking for another opportunity and a move back above key moving averages, the 200-day just overhead, 50-day below, with the number of stocks trading above their 50-period moving average moving off of the red area, or overbought, exhausted if you will, back to an area where we could see more energy and a follow-through to the upside. We see the S&P 1500, S&P 500, S&P 400 mid-caps, S&P 600 small caps on a buy signal above the red line and green. Histogram is green as well above the trigger line, with price action moving back above the 9 and 21-day moving averages. In addition, breaking down the breadth of these three, the large cap advanced decline percent on a cumulative basis, mid caps advanced decline percent, and small caps advanced decline percent. We can see the upper two panels are above the 200-day moving average and moving away, whereas the small caps are lagging a little bit, so we want to see that improve this week. As the Russell 2000 shows, we've been in the sideways range for the past 6 weeks. Looking for direction. If small caps would continue this week and move higher, obviously that would be bullish and would help with the breadth that we just showed you on the S&P 1500. RSI is at 50, so we could go either way. MACD is above its signal line, so the bulls need to lose control to the bears. So we'd need to see at least a week more or two of bearish price action to push this lower going into July, the seasonally strongest month of the year for tech. Now there are a lot of names, small cap tech names in the IWM, as well as small cap biotech and small cap oil and gas. So we need to see those three groups working together in order for IWM to follow through. And while the S&P 500 spiders, as we pointed out previously, remain in a sideways range below 315 and above the 200-day and 50-day moving average, we do see a broad measure of market participation in the Wilshire 5000, currently about 3,900 stocks, showing us a higher low on this daily time frame. We're looking for a break above this 32.2 level, while the cycle, this is a Kopach curve, telling us that price action has a potential to move higher, just like the S&P Equal Weight Index I just showed you, where the number of stocks moving above their 50-day moving average was around 70%, well off of the 90% level where you would expect to see exhaustion and price pull back. So although we're in a sideways range on the S&P 500, easier to see on the S&P 60-minute chart, the fact that we're moving sideways and with Kopach moving higher, there is a possibility that we could see this continue higher. Some people will look at this as a lower low and a divergence, which is a valid point. So let's dispense with our opinion and watch what price action tells us to do this week, knowing where the cycles are presently. We also need to be mindful of the New York Stock Exchange, 2,000 stocks on the composite, 2,900 overall that trade on the New York Stock Exchange. This is a measure of new highs minus new lows. The histogram tells us when to be bullish, when to be bearish. If we look at the zoom window on the right side, we can see that the moving averages are rising, that the number of stocks moving higher than moving lower net was plus 40, 40 stocks, or plus 83%. While the 60-minute shows the last hour on Thursday before the close, we did see some profit taking. So with that in mind, this sideways range perpetuates. We'll look for price action to confirm which direction we're going to move to start the week, knowing that the number of stocks making new highs versus new lows continues on a bullish trajectory. If we look at volatility, that also helps. This is the VIX turned on its head. It's an indicator that we use, $1 : VIX, which gives you a flipped version. I've just colorized it so it's a visual cue. As long as this stays green on a 60-minute time frame, we look for higher highs and higher lows, while already knowing on the daily time frame that moves lower on the VIX would force dealers, market makers, and institutions to close their short put positions because volatility is collapsing. They'll buy those positions back. That's common sense. They'll also turn around to hedge their positions against the market by buying futures. So if this drops, look for the markets to be bullish, knowing that the NASDAQ 100 is outperforming, with growth stocks leading. Here is the S&P 500 weekly time frame bond stock ratio between UST, the 10-year, and the S&P 500 moving lower. As the red line drops, that becomes more bullish for equities over bonds. Equities are in favor. A drop below the 65-period moving average is a confirmation. As we also watch for HYG, high-yield corporate debt, and junk bonds to move higher. A move higher is bullish for equities. This would be an indication of risk appetite. While junk bonds also turned up last week, in addition to what we see with IBB, biotechs, also a risk-on indicator in green, IWM in red, and USO or crude oil in blue, all moving higher together, bullish for equities if these four continue to move higher this week. As a result, we see bonds like the 20-year TLT fading last week, holding on to the 50-period moving average on Friday for dear life, with a very large volume by price band of resistance overhead. If TLT would move higher this week and above this volume by price band, I would expect to see some pressure on the S&P 500, or vice versa if the S&P 500 starts to move lower in that sideways range we pointed out previously, knowing that the bond stock ratio, while moving lower, is still sitting on top of the 65-period moving average, presenting a neutral to slightly more bullish picture for the week ahead. US dollar is also staying in this ascending channel pattern, approximately the midline of that channel, with MACD above its signal line and RSI rising. Watch commodities. If this were to bolt higher for any reason, that would show a safety trade is potentially in play, which we might also see with gold. It's perched and ready. Looks like an imminent breakout, rising along its moving averages, the 9 and 20, with RSI above 50. This is telling you to respect the trend, higher highs and higher lows. We're looking for GLD and gold to move higher this week, with a contrasting signal in copper, which is continuing to make higher highs and higher lows, moving above resistance, which is bullish for equities, especially the construction-related names, building supply, and home improvement. This is a forward-looking indicator, and one which we look at every week, as we can see on this monthly time frame. Back in 2009, prior to the reversal on March the 9th, copper turned and started shooting higher. Same thing in 2016. Right after the election, copper started moving higher. And right now we're starting to see copper moving higher again. So if this higher low on the monthly time frame leads to a higher high, during the interim, you would expect to see construction-related names, builders, home improvement names, all moving higher and sustaining a bullish path going into the fall. Also knowing pending home sales last week spiked to a record 44.3%, as home buyers rush back into the market. As we can see and confirm in this housing starts chart, where we reversed markedly the month of May into June, this trend continues and we start to move back up towards the peak that we saw prior to the COVID-19 case. Then we should be well on our way back to the peak that we saw in 2006, 2007. In addition, we'd like to see crude oil moving higher, up over 545% over the last 11 weeks. Looks like it's going to produce another higher high. Last week we moved higher, consolidating just below these levels that we saw in late 2018, this reversal area, just below that area right now, with a Fibonacci resistance area of 50% and 618 noted and shaded blue. With this positive correlation to the S&P 500 and equities in general, if crude moves higher, that would signal a follow-through, in addition to what we saw with high-yield corporate debt and biotechs moving higher. The sector heat map is also improving, less red compared to last week. At Friday's close, we can see that media and quite a few other names in the healthcare group, biotechs, all moving higher last week. Would expect to see technology improving this week as well. We also had international indices moving higher, like Argentina, Chile, emerging markets. Almost all of them are above the 21-day moving average, the blue line. So make a note of it. Pick your favorite country if you're living therein. In addition, if you're looking for international indices to trade in your 401k, I happen to like the Vanguard International Growth Admiral shares, VWILX. If your fund doesn't offer that fund, look for a comparable name. Do note that we're above the February highs as international markets continue to outperform. In addition to what we talked about with the FANG stocks, if you think growth is going to fail this week or next week into the seasonally strongest months of the year, you'd need to see the FANG stocks rolling over. Same thing with the sectors. All of the sectors pulled back to either the 21-day or the 50-day last week, bouncing. You can see real estate is back at the 21-day moving average, the blue line. Transports, materials above. Communications, Facebook dragged that a little bit lower last week, but it did move back to the 21-day. Energy below the 50-day, so that's a little weak. Financials a little weak, sitting at the 50-day. Industrials just below the 21-day. Technology again outperforming. Seasonally, this has been proven to be the strongest month of the year for tech, so expect to see technology continue to move higher this week. In addition, healthcare and consumer discretionary are performing very well. For people who are investing in 401ks, not interested in day trades or short-term swings, just keep an eye on the XLY, XLP ratio. This is consumer discretionary, things people don't need, to staples, things that people do need, toilet paper, tissue, toothpaste, soap, clothing, things like that. This rallied very hard in 2019 after the 2018 20% drop. We're seeing the exact same scenario unfolding right now. So that's telling you institutions are more offensively positioned than defensively, like they were back in February and March when this rolled over and cascaded like a waterfall to the current lows that we saw in March and April. So look for this to continue higher if you're bullish longer term and you're thinking about your 401k or IRAs, retirement accounts. Here is the IBD 50 for the week. My criteria for watch list candidates are price action above the 9 and 21-day moving average, both moving in a bullish direction. We've got Adobe rising above, bouncing off the 21-day, finding buyers, volume increasing, MACD still above its signal line. So if it's above the 9 and 21-day, we'll consider it. With real estate moving higher, ARE bouncing off the 9 EMA, looking for a follow-through this week. RSI is above 50. American Tower responding nicely on Tuesday, following through. A little bit of selling on Friday. If it moves above this volume by price area, we look for a follow-through. RSI is above 50. Healthcare performed very well last week. Look for Anthem Health to move above the moving averages. 50-day is resistance. RSI is right at 50 as well. Applied Materials, nice follow through from the 21-day moving average. RSI above 50. Moves above the volume by price band. Look for no overhead supply to add little resistance as it trends in a bullish direction. Looks like we could see some follow through this week. Remember, July is the seasonally strongest month of the year for technology. Same idea with Autodesk. Bristol Myers Squibb, a lot of these pharmaceutical names look good this week. Pfizer, Merck as well. Looking for a follow through above the 50-day moving average with RSI above 50. Many of you guys and ladies are swinging this one into this week. Chegg also following through, gets above these volume by price bands, no resistance, very little supply. RSI is rising. Church and Dwight looking for a follow through. Remember to check earnings dates on all of these going into earnings season. None of these are reporting this week that I'm aware of, but you still need to double check. Dexcom looks like a follow through after the test of the 50-day moving average, moving above the 21-day. RSI is above 50. Volume by price resistance gets above this level here. The stock is most likely going to put in some higher highs into the seasonally strongest month of the year. Dynatrace follow through, took a pause on Friday, looking for a follow through. We have RSI above 50. Volume by price, again, gets above that area. We could see a follow through this week. Ensign Group, many of these names look very similar. Bullish week, yet RSI is above 50. Looks like this could follow through this week. Keep an eye on it. Facebook, looking for a trade here. Another name that had a very good week, reversal. Then a pause on Friday. RSI still above 50, sitting at this volume by price band support. Focus Financial, there was a couple of articles written about this in IBD this weekend. Looking for a follow through. RSI rising. Fortinet, Security, higher lows, 50-day moving average, recent test, follow through, very close to the 9 and 21 day. If this starts to push higher, you got a good risk reward entry with a stop below the 9 EMA. And RSI rising and above 50. Flat into the end of the week, but looking for a follow through this week. Watch CyberArk and other names in this sector as well, as we like to see groups moving together. Futu Holdings following through this week, most likely in an area of no overhead supply. RSI showing muscle. Steeply sloping 9 and 21 day moving averages, 50 days chasing both of them. Very bullish looking stock. GSX, tutoring and education services in China. This stock continues to move higher, I believe. Andrew Leff doesn't really like this name very much. It's doing exactly the opposite of what he's been looking for. As Citron, I believe, is short. This continues to thrust higher. We'll look for a follow through this week as well. That said, I am less interested in Chinese stocks at the present time, so trade with caution. IIPR invests in climate-controlled warehouses for production of cannabis specifically. Nice bounce into Tuesday and Wednesday. Taking a pause on Thursday. Again, seasonally strongest month of the year, July. We're watching for semiconductors to all move together. NVIDIA, CLAC, LRCX, AMD, lagging a bit. Intel, among others. CLAC looks good for a move and a continue this wave higher. RSI is above 50. If gold breaks out, this one's set up a little bit better. Kirkland looks a little bit better than Franklin Nevada, also an IBD 50 name. If gold does break out, look for Kirkland Lake to follow through. Medical Properties Trust, again, the real estate group looked very good last week. Look for this one on a pause on Thursday to follow through on this wave up as volume by price tapers off, so resistance becomes less and less as we move higher on this $20 stock. Netflix had a good week, pausing on Thursday. Looking for a follow through in this wave up. We could see a little pullback and a test of this breakout zone as well with RSI above 50 pointing lower. All depends on how we open up on Monday and Tuesday. NVIDIA, like CLAC, LRCX, and others, we're looking for a follow through in the semiconductor industry group. Palomar Holdings at a breakout level, looking for a follow through or a retest of the 9 EMA for potential entry if you missed it last week. Bullish 9 and 21 day moving averages, 50-day moving higher, RSI above 50. PayPal continues its outperformance along with Visa, trending above the 9 and 21 day moving average. Nothing to believe that this won't continue higher. Sprouts Farmers Market setting up again on this pullback to the 9 and 21 day moving average and volume by price support. If we see a bullish day Monday or Tuesday, look for a follow through and another wave up as RSI remains above 50. Taiwan Semiconductor gapping up last week along with what we saw on Micron. RSI above 50 and rising, looking very bullish here. Teradyne, RSI above 50, looking for a breakout. Place an alert if it breaks out above 86, we'll look for a follow through. Trade desk also looking very strong, trending along the 9 and 21 day moving average. Viva Systems trending along the 9 EMA. No reason to suspect that this is going to roll over anytime soon. Looking for a breakout above this level as a trigger. Vertex Pharmaceuticals along with Merck looks very strong, looking for a follow through. Virtu Financial as well, looking strong. Workday trending should continue. Pause on Thursday, looking for a follow through, RSI above 50. In addition to Zoom Video continues higher. And Zynex, which has been really kind of choppy over the last few months. Looking for a breakout, something to tell us to trade this one to the long side. Otherwise, it's just a day trade stock, short-term swing. Finally, there's the Dow 30. Apple continues along its trend, RSI above 50. Pause on Thursday, had a nice start to the week, RSI above 50. Boeing looking for direction, sitting right on top of the 21 day with RSI at 50. Caterpillar looking for a push higher into this wave up with RSI rising above 50. Dow DuPont looks like it could continue higher. We had strength in materials last week. 3M looks strong. We're looking for a follow through here as well. MACD's turning. RSI is above 50. Merck looking strong above the 21 day. RSI above 50 rising. MACD crossing. Volume increasing. Look for Merck to continue. Microsoft trending at 52-week highs. RSI above 50. MACD above its signal line and volume increasing. Look for a follow through this week. Maybe a test of the 9 EMA. Otherwise, we are looking for a bullish follow through. Nike above the 21 day. Pfizer following through on the gap up. On Wednesday, volume increasing, looking for a push higher. News of a potential vaccine, MACD crossing, volume increasing, RSI above 50. Procter & Gamble looking for a follow through. It did fade a little bit on Thursday. And Visa looking for a follow through along with what we saw on PayPal. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. Make sure you check out the additional stocks that I didn't cover here in white and also in green from the MarketSmith Growth 250. Looking for those stocks to do the very same thing we just pointed out. Price action above the 9 and 21 day moving average. RSI rising, MACD crossing or about to cross, and volume increasing. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. I'm going to get outside and enjoy the rest of my 4th of July weekend. Remember to start off cautious. VIX is the key. And watch for support at 3100, resistance at 3150 to start this week of trading. Take care, have a great weekend, and we'll talk to you soon.